Hi everybody, it's FIBO Group, and you are watching to the Market Watch review. The global capital markets remain calm today. The gains yesterday were extended by most of the major bourses in Asia Pacific. Europe's Stoxx 600 is moving for the third consecutive session. It is now at 2.5-week highs. Futures in the USA are about 0.5% higher. The major currencies are moving higher in the Canadian and Australian dollar, while the yen and New Zealand dollars and sterling are falling. Yesterday, gold fell below $1,840 and to $1,820. Today, it is consolidating below $1,830. August WTI is holding firm despite concerns about political problems that could affect Ecuadorian and Libyan oil production. It trades at just $112.12 per barrel, close to a 6-day peak. Asian Pacific market. Local press reports claim that the BOJ holdings in Japanese government bonds have exceeded the 50% mark for the first time. The Bank of Japan held 514.9 trillion of the 1,021.1 billion yen remaining as of June 20. This is not something that was discussed in anticipation of the Bank of Japan's last meeting. The dollar was pushed higher against yen and reached a 3-day peak at JPY 135.80 in early European trade. Although the Australian dollar remains firm, it is still below the $0.7000 limit. Support may start at $0.6940 right now. Market of Europe. Johnson, the UK Prime Minister, suggested that there might be another gasoline tax cut. After surviving a vote of confidence, but still wound up, the government is now facing the cost of living crisis. Yesterday's House of Commons challenge to the government's Northern Ireland Protocol revision was overcome by the government. Next comes the committee stage, where amendments are possible. Sterling was restricted to a range of less than half a cent today, above $1.2250. Market participants are still pondering the new fragmentation tool of the ECB. The euro trades at the top of its 2-week trading range. Yesterday, it reached $1.0615. It is supported in the $1.0560 to $1.0570 region. Market of America. Atlanta Fed's GDP now rose to 0.3% in the last quarter. This is an annualized rate, which basically means that the economy has stagnated. It remains at the low-end forecast. According to economists, the 0.7% increase in pending home sales was not the 4% drop predicted. However, last week's flash PMI report suggested that sentiment and survey measures are deteriorating faster than the real sector. Another slew is available today. For GDP calculations, the most important data is May trade and inventory data. Today, the Canadian dollar continues to recover against the greenback. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.